Happy St. Patrick's Day. It is Monday, March 17th, 2025, and time for your Monday market update. Thanks so much for watching. Let's take a quick look at our McHenry County numbers for the last 7 days before we dive into our housing market. So we had 128 new listings hit the market. We had 138 go under contract, so more under contract than newly listed. That trend is not going to change. We had 69 closed sales, 30 price changes, 3 expireds, and 53 currently on the private network. Now, I went back and looked at my notes from the last 2 years, from 2024 and 2023. These numbers are pretty much just about the same as they were the last 2 years. We had a few less new listings this time last year, and a few less, so a little bit more this year than we did, but I mean marginally, nothing even worth mentioning. Under contracts are right about the same. Price changes. We've got a few more price changes this year than we've had in the last couple of years. Part of that is probably due to the fact that homes are, number one, being overpriced, because if you have an agent that's looking at sales that happened at various times of the year, you really have to look at the months when things go under contract and understand what was happening with mortgage rates at that point in time. So that's a key factor to look at when you're comparing home sales. But also, you know, just because a seller goes, oh, well, price is going up, I want 20% more for my house than my neighbor sold for last year. Well, prices are not increasing at 20% year over year like they were in 2021. Between 2020 and 2021, yes, we saw 20% increase in home prices year over year. 2021 to 2022, we still saw some pretty big price jumps, probably about 10% around here. In recent years, they have slowed in their appreciation. So homes are still appreciating here, just not at the rate that they were for a couple of years. So if you've got a seller that's going to overprice their home, well, yeah, then guess what? You're going to have to do a price change. You have to keep in mind when you're pricing in this market that buyers are looking at your list price and thinking that they have to give you at least that, if not more. So if you're going to overprice your home, you're going to sit on the market and then you're going to have to do a price reduction. So that's probably part of what's happening there. The other thing is that buyers don't have any extra money. So when they're going in to look at a home, they're thinking that they've got everything that they've saved has got to go towards their down payment and their closing costs. So they don't have any extra money to spend on doing home repairs. So if you're going to list your home high and you've got some home repairs, or even if you're listing right where it should be, if you have home repairs, you might be having to do a price reduction. So we are seeing some more price reductions now than we did the last 2 years, last 5 years. Keep in mind, 5 years ago today, we were all in lockdown. So let's be grateful that we're not there. I am so glad that we are not dealing with that anymore. So again, we'd like some luck of the Irish today. We've got the Fed's meeting. Today is the Federal Reserve is meeting, and they'll do their press conference on Wednesday. Coming out, they're going to have the report of what's happened so far this year and any economic projections for this year. Now, a rate cut is not expected. Now, keep in mind, 2 years ago in 2023, when they were meeting this week, we were hoping for no more rate hikes. So we are on the different side of that now. We are having rates coming down ever so slowly. For about 7 weeks now, we've seen rates coming down. They're heading in the right direction, but they are going to come down slow. It is not going to happen overnight. Now, that is a good thing. If all of a sudden rates were at 5% tomorrow, we would have big problems. We do not have enough homes to go around. We still have very, very low inventory. So if you're driving around McHenry County and you're thinking, oh, but there's builders going up everywhere. We have builders building in Algonquin. We have builders building in Pingree Grove and in Hampshire and in Wonder Lake. We have builders growing like crazy. Well, not enough. We had builders not building for 10 years. And at the rate that they're building right now, it is going to take us 41 years to get to a fair and balanced market. So we are a long way away from having anywhere near enough homes to sell given the demand. So remember, people move due to life changes. They don't move because of interest rates. So life changes are going to continue to happen, and those things are going to continue to happen whether rates are high or low. And people are going to need housing. So we have household formations. That's what creates the need for more homes. And a household formation is when Carter, my baby, decides that it's time to move out of mom and dad's basement. So that is when, you have a household formation. It is not me selling a house and buying another house. That is not a household formation, nor does that create any inventory. What we need to create more inventory is we need builders to build. Now, right now we have, according to the National Association of Home Builders, very low builder sentiment. Part of that is due to rising costs to build, tariffs, deportations. All of those things are going to make it more difficult for builders to build. Now, on the flip side of some of this, we've got some other things happening that a lot of us don't really think about, and that is commercial loans. Commercial loans are 5-year balloons. Every 5 years, they have to be refinanced. So you've got all of these people commercial people or business owners who got loans in 2020 or refinanced in 2020, and all of those loans have to be refinanced this year. If they are locked in at a 3% rate or something, and then now they have to get a 7 or 8% loan, that is going to greatly impact their bottom line and their ability to employ people. So that is a factor that you have to keep in mind, that the federal government wants us to potentially be in a recession, or they want these rates to come down in order to protect businesses. Now, we don't want to make businesses the number one priority, but they are a big priority. If your employer can't afford to employ you anymore, that is going to be a problem. So we don't want to have unemployment go crazy. We don't want to have businesses have to fire people in order to make up because their financing costs went up. So that's just another factor. So anytime you're looking at all of our economic data, you've got to realize there's a lot of moving parts. We've got to think about what's happening in the business sector, commercial loans. We've got to think about what's happening in the private sector with personal loans, and all of these things play into account in our economics that equate to the situation that we're in. We have inflation coming down. The Feds want to see that continue. They want to see interest rates come down, but they don't want to spike inflation again. So it's really a bit of a teeter-totter that they're trying to balance. And so we'll see what happens this Wednesday with their report when they come out. So as of right now, we are headed for a really great spring market in terms of it's going to be good. If you need a home, we will be able to find you a home. Is there a lot to choose from? No. But there's also not going to be a lot to choose from anytime soon. We do not see this market changing. It's just not, it's going to be slow. Interest rates are expected to continue to come down, which is great if you have to refinance. There are people who need to refinance if they bought, in 2023, when we had interest rates at almost 8%, yes, now would be a good time to refinance. Rates are now at 6.65, so they are lower than they were, but they're not going to ever probably be 5, not anytime soon. Maybe in the coming years we'll see 5%, but certainly not anytime soon. That is not even speculated. We're hoping to maybe get to 6.5 by the end of the year. So if you're a buyer, now is a great time to get out there and start looking. If you have not already started looking, make sure that you contact me or someone that you know that you want to use. Please contact them and reach out and start getting a plan together. We do anticipate a lot of homes hitting the market in the coming weeks. I know I have 5 coming to market the first week of April and May. So we've got some coming up that there's going to be a lot to choose from, but you got to be ready. You can't have a home sale contingency, or if you do, you better get that home on the market and get it under contract. So there's a lot of things going on, but I think it's going to be a great year. We're going to have a lot of homes sold. A lot of people are going to be really happy to find their forever home, and people moving on to their next phase of life as well. So if you have any questions about it, please call me. We can navigate this together. It's going to be a great year. So thanks so much for watching. Have a great day.